Hello, welcome to Cosmic Money AI. Today, I'll be discussing the impact of yesterday's PPI number and this week's CPI number, the impact of those to the stock market, crypto, and your daily life, which is the most important than anything else. So, if you like the content, please thumbs up and subscribe and welcome to share with your other interested friends. That will be very helpful for my channel, which is considerably new. So we will first discuss what is the number, and if the sound and other things are okay, so please let me know. And yesterday I wrote an article on the uh, Medium platform on the detailed analysis of CPI and PPI impact. If you are interested, I welcome you to go through this article with more detail. And if you want to read my other article, so please follow my Cosmic Money AI on the Medium platform. So, what is the CPI and PPI? CPI is the index what the consumer side feel. So CPI is like a kind of measure of the inflation of the price that what consumer like you, me, and other people who consume the goods, they feel. And what is PPI? PPI is the number what producer who produce the things, they feel. Okay, so what it means that what producer feel, transfer that to consumer. And so in some sense that PPI is kind of early information and CPI is a kind of late information. There are many other factors, but I simplify it in these two terms just for the this week's impact, recent impact. Now, if you are interested to go through all the detail, please feel free to do so. Here I clearly mentioned what the Federal Reserve mentioned in their website. The measure of the average change over time in selling price received by domestic producer for their outputs. That is the PPI. And CPI is the what urban consumer feels. Okay, what is the number of CPI and PPI in this week? So as you can see here, the number came yesterday, which is the forecasted. The previous number was 0.1. The forecasted was 0.1 and PPI came 0.5. Okay, which is higher than expected. Okay, not so much higher, but higher, 0.4% higher. That's still decent number. PPI month to month, this is core PPI, and month to month compared to last month, the previous month it had minus 0.1%, forecasted was 0.1%, it came 0.3%, more than expected. Okay, and CPI number few days ago, I think Wednesday, the expected was core PPI, core CPI month to month was 0.3, forecasted 0.3, and 0.4, a little bit larger. And CPI month to month was 0.3 last month, and this time expected was 0.2, came 0.3, also higher. All the number were higher. CPI year to year became 3.1, which was expected 2.9%. So as you can see that all numbers are higher than expected. People expected the inflation to go down, but eventually it become higher. So that's already a kind of red flag. Okay, people expected to have down, but it became higher. Now, what is the CPI current scenario? So last year it came from 9 all the way to around 3, but it is difficult to go below 3 to 2. As you know, the current interest rate is highest at this moment in this price cycle, and Federal Reserve was planning to reduce the interest rate depending on the inflation. They clearly mentioned that inflation has to be, their long-term target is inflation has to be below 2%. Currently, it is around 3%. Reducing from 9 to 5 is one story, 5 to 3 is another story, but 3 to 2 is very difficult. Currently, election time is also there. And so if the inflation is high, the price stability will be very bad. So that is what Federal Reserve Chair Powell mentioned many times. And he starts his conversation from there. So if all these PPI numbers are bad, and they look PPI more than CPI, if the PPI number is bad, then next CPI number is going to be even worse. Expected, okay? Anything can change. So if the producer feel the inflation, then it transferred to consumer because the goods production in price increases. Now, what is the other scenario? As you can see that then I mentioned that PPI is a little bit of leading indicator in comparison to the CPI, and you see CPI a little bit later, that impact. Now, the additional factors for CPI and PPI are crude oil and natural gas. Why? Because when the oil price increases and gas price increases, the production of industry price is also increases. Means that in order to produce your goods which you are consuming, that price also increases. Make sense? So that is why the crude oil and gas price is very important to consider. Gas, everybody needs it for their transportation. Oil, everybody needs it. So to prepare goods, to transport the goods, both you need the fuel. If the fuel price increases, this price also increases. Inflation also increases, and that impact to CPI and PPI. Therefore, that impacts to inflation, and if inflation is high, Fed cannot cut the interest rate. Make sense? Okay, so I will discuss now, this is the fundamental analysis. Now, technical analysis, I will discuss that as you can, now what is the price of, sorry, what is the price of natural gas and oil at this moment? So just a moment. I open up the crude oil price. Okay, very good. So this is the crude oil chart. Okay, so It is monthly chart, crude oil monthly chart. Okay, so you can see that crude oil currently is from, this is 2014 all the way. This is long time support and resistance. So this is the pivotal zone. Then it went up, crude oil. This is crude oil, okay, and then came down, and this support, this it came here, and then hit this resistance lines, came here, then all the way here, tried to break, could not, came down, up, down, and then breakthrough, and then holding here up, broke the trend line, and holding here now. And you can see that RSI is quite low now and ready to fly. Stochastic RSI is also low, but it is giving the sign that it may fly very soon. Weekly time frame. Clearly, you can see that it created higher low. So it broke the trend line, retested nicely, met the higher low. You can see the close was higher low, and then ready to fly. Oil is giving enough sign in higher time frame that they are ready to fly. And you can see that RSI, stochastic RSI is rising, and in the last part, they really fly very fast. Now, the gas price, natural gas. So the oil price is ready to fly. Gas price is also, you can see that weekly time frame, that it has been uh, making the support here, again support, retested, raised back, then broke the trend line, retesting now. And then you can see stochastic RSI is all-time low, RSI is very low, and it is time to fly. So, and why this, you can say that it is breaking very low. Yes, it is breaking, but why the natural, what is the situation now about the natural gas? The situation of natural gas now is that recently US started producing a lot of natural gas, and that actually uh, brought the price lower. But of course, this is the election time, and those companies will request government to manage, and of course, government will have to listen them. They are very powerful organizations. So most likely, nobody knows the political scenario, but it is likely the scenario that there will be some agreement with government and companies, and the price will be managed by both of their agreements. So the natural gas price is likely to rise. Oil is likely to rise. That means it will impact to the inflation in the coming months. That means that Federal Reserve Bank has very difficult choice to drop the rate. Okay, this is the technical analysis. You can see the RSI, stochastic RSI are ready to fly, which I actually mentioned in my article. That is, those charts are there. You can read from Medium, and then coming down. Okay, so the market impact. If the PPI and CPI are higher, if the oil price rises, then oil and gas rises, and CPI and PPI become higher. If CPI and PPI become higher, then the inflation will rise. Yes. So if the inflation will rise, then Federal Reserve has very hard choice to reduce the price. If Federal Reserve cannot reduce the price interest rate, that means they will not able to print the money. That means there will be less liquidity in the market, and that means the impact on stock, crypto, Bitcoin, Ethereum is not very positive. And this is the overall market situation. And what is the current expectation of the interest rate of the people? As you can see, that people were expecting few weeks ago the last meeting of Federal Reserve before that, they were expecting to cut the rate in March, next meeting. But now you can see that expectation in March become lower, 49%. And they were expecting 6 rate cut in the last, before the last Federal meeting. But Fed clearly mentioned that it is difficult to cut rate before March likely. So after that, this number, instead of 6, it become 4. Instead of March, it become June. So first rate cut is they are expecting in June, before they were expecting in March. Very interesting. So this is the March, right? But now you see the March is getting priced, and then it is probably starting in June. So please check this CME time to time. I will also update. So the first rate cut is likely to happen not before June, I guess. So by March, they cannot probably, that is what hinted by federalism. But if the inflation rises, if Fed cannot cut the rate, then some small and medium bank can also fall down. So please be prepared for that psychologically. Okay, I wrote it in this article that some bank may also fall. That is, and that is not really, but it is the likely scenario. But what you can do, that is my purpose to, like how you can make money out of this market. So protect yourself, make the assets which are more stable, keep enough cash, and if you want, keep some gold. Many banks have been reserving some gold in this period. So if the central banks are reserving the gold, then you need to think of it. Okay, so so you cannot control Federal Reserve. You cannot control the market. You can only take the decision which can protect you even in the difficult scenario. Okay, makes sense? Even if the bank falls, which is, I think that if the inflation rate is still higher, if the banks start falling, then Federal Reserve has to cut the rate. But until then, probably it's not, Federal Reserve will not cut the rate. If the inflation is still high, but nothing bad is going to happen, then Fed cannot cut the rate. Either something bad has to happen or something good to happen. Good means if inflation comes down to 2%, Fed will cut the rate, even if everything is healthy. But even if the inflation is high, around 3%, but banks start falling, Fed will likely to cut the rate. So as a conclusion, that reduce the risky asset, give enough stop loss to your risky asset, keep enough cash, and if you are interested, you can check out my other Median article that gold is likely to be dark horse, which I mentioned in another article. You can check from here. So you can check you can check my other article where I mentioned about the gold price, outbreak of gold price. And yes, so there are some recession in many other places. So you can check that article also there. So there is a gold price. You can see that gold breakout happened, but then it is under, it is now retesting, and then it is ready to fly. So gold is probably dark horse in this year. And so please protect yourself. That is the impact of PPI and CPI, what is suggesting you. But it is all about probability. There is no guarantee. So according to the probable scenario, you can play the game in your favor. So otherwise it is 50-50 chance. My purpose is how to make it 70-30 or 80-20 in your favor. That's the thing. So I hope you have enjoyed. If you like the content, please hit the like button. That will help to my channel. If you are interested in crypto and uh, um, register in some of the exchanges, then I have some, you can sign up bonuses. If you sign up with this link, the registration link, then on Bybit, MEXC, OKX, Bluefin, then you get some extra bonuses and reduced trading fees. And yeah, so please enjoy the bonuses and make money, trade safe. And if you are liking my other videos and these videos, then please subscribe my channel and share with your friends, and write me in the comment below what you want to see next. This is the macro micro picture at this moment. I will update you what is coming next. All the best. Trade safe, my friend. Bye bye. See you next time.